I'm Kelly Malone with Stephanie Reed Real Estate. Today on the Voices and Views of Sun Valley, we are going to do something a little bit different. We're going to take a break from the lifestyle of Sun Valley because as a buyer specialist, I've noticed that there have been some misconceptions or questions about purchasing real estate with the new tax reform law. So today I'm here at Lawman, Feltman, Peterson, and Pierce to speak with Heidi, Shelton, and Kody, Laggis about what to expect for 2018 when purchasing real estate and then having to pay taxes at the end of the year. So Heidi, what can you tell us about the new capital gains tax reform?
Well, the good news is that the capital gains rates have not changed at all with the new tax bill.
Are there different limits for how much you can claim?
No. Well, so it used to be that you could exclude up to $250,000 if you're single when you sell a home every 2 years, and you can still do that. It's $500,000 if you're married. So
okay,
still the
and
same.
so it doesn't really matter how expensive the home is that you purchase?
Well, that actually, you can only deduct mortgage interest on up to $750,000.
Okay.
So it used to be $1 million. That did change.
Okay. Kody, can you tell us about the mortgage interest deduction?
Yeah, as Heidi mentioned, the old rule used to be you could deduct interest on $1 million of debt, but it's since changed to $750,000, and the $100,000 of HELOC has also disappeared, so that's no longer around.
Okay. So I know like people used to have an incentive to purchase real estate because they were going to get a deduction for the mortgage interest, and I know that they've changed some of the other deductions like the standard deduction. Do you find that people will choose just their standard or personal deduction over taking the mortgage interest deduction?
Maybe not so much around here. I'm sure that property taxes on a lot of your clients' homes is going to be beyond that, and the interest will get you above the standard deduction, so they're probably going to stick with itemizing.
Right. Another thing people ask me about is the 1031 exchange. I know that it was removed for personal property, but is it still the same, or is there anything different about it for real estate?
Personal property has gone away, so now it's just real property for real property, but other than that, same rules are in place.
Perfect. Is there anything else anybody who's looking to purchase real estate in 2018 should know?
There's some changes to depreciation rules, so you can accelerate some deductions there, and then it'll slowly phase back down to what it was.
Okay.
But that could help.
And I do think it's important to note that a lot of the new things that were introduced, they have sunset provisions on them. So, for example, the mortgage interest, the cap at $750,000, that goes back to $1 million in 2025.
Okay.
So a lot of these things are temporary.
Temporary. Okay. Well, that's great to know. As you can see, Kody and Heidi have a lot of information to share on taxes, so if you have any further questions, feel free to call me or hit them up at Ken Pierce's office here at Lawman, Feltman, Peterson, and Pierce. Thanks so much for joining us.
Thanks.
Thank you.
Thanks. So wasn't so bad, was it? You guys did a good job. Thank you.
'Cause I'm the tax man.